Right, now we're going to go back to some live presentations, and next up is a mid-tier gold producer in the Americas, Equinox Gold Corp, and speaking on their behalf is Greg Smith, President. Greg.
Thanks, Joe, and thanks everyone for attending this presentation on Equinox today. I think, like everybody, it's been about 2 years since we presented at this conference, and a lot has changed for Equinox over those 2 years. We acquired 2 companies, Lee Gold Mining and Premier Gold Mines. We built and commissioned phase 1 at our Castle Mountain project in California, and we're in the process of completing construction at our Santalou project in Brazil. We also divested some non-core assets, and our copper-focused spinout, Solaris Resources, went public. And with the Premier transaction, we also became a large shareholder of i-80 Gold Corp. So a lot's changed in 2 years, and today I can now present Equinox as a mid-tier multi-asset gold producer with the assets and the plan and the funding to become a 1 million ounce producer over the next few years. So with the completion of our acquisition of Premier Gold Mines, we now have 7 producing mines, all in the Americas, in the United States, Mexico, and Brazil. We also have 4 growth projects, which brings the Greenstone Project in Canada into the portfolio, as well as our Santalou Project, our expansion at Castle Mountain, our expansion at Los Filos, and soon an expansion plan at Aurizona, where we plan to go underground in Brazil. Across the portfolio, we have 16 million ounces in reserves, 29 million ounces in M&I resources, inclusive of those reserves. And this year, we intend on producing around 600,000 ounces of gold at $1,300 all-in sustaining cost. So the company is run by a very experienced management team led by our chairman, Ross Beatty, our CEO, Christian Malau. We have a market cap of around $2 billion US, and I'll demonstrate later in this presentation why I think that's very excellent value for new shareholders that would come into the stock today. Again, we're on a path, a fully funded path, to 1 million ounces of production over the next few years. So we have a number of operating mines. I'm gonna try and hit just the highlights here. 2018, I think, at this conference, we announced the acquisition of our Mesquite mine in California. And at the time, it had about a 3-year mine life. It had some potential to grow or extend that mine life. Now, 3 years later today, we still have a 3-year mine life. And we've recovered all of our initial capital in Mesquite through free cash flow, and just yesterday announced a 65% increase in our M&I resources. So Mesquite has just been a fantastic asset for us. I think we're going to be mining there for many, many more years. And over time, you'll continue to see those resources be converted into reserves, and we intend on building more leach pad space there. We also recently refreshed the fleet at Mesquite. So Mesquite's been a great asset for us. This year, it'll do around 130 to 140,000 ounces of production. Our Castle Mountain mine, I mentioned we built and commissioned phase 1 at Castle Mountain. This is a run-of-mine open pit heap leach operation. Over the next couple of years, we'll run it at a smaller scale, 20,000 to 40,000 ounces of gold production per year. But later this year, we plan on commencing the permitting for our phase 2 expansion, which will increase production at Castle Mountain to over 200,000 ounces a year over a very long mine life of over 16 years. Los Filos, this is an asset we acquired in the Lee Gold transaction. Guerrero, Mexico, this year will do around 120 to 140,000 ounces of gold production. It's got a number of underground mines and open pits, and is currently a heap leach operation. We are working on a study that would contemplate the construction of a CIL plant at Los Filos, take advantage of some of the higher grade material that we're going to be recovering from the Guadalupe open pit, which is brand new, and the Bermejal underground. As many of you know, we've had some social issues at Los Filos over the last year. This has obviously had an effect on production, and it also has an effect on sort of the timing of when we want to make these investments. So our focus right now at Los Filos is getting the communities and all stakeholders on the same page so that we can make this investment and expand this mine in the future. Mercedes, another smaller asset that we acquired as part of the Premier transaction in Sonora, Mexico. We'll get about 35,000 ounces from Mercedes this year, subsequent to closing of that acquisition in April. Moving south to Brazil, we have our Aurizona gold mine. This was the first mine that we built and commissioned as Equinox. This year, we'll do about 130 to 140,000 ounces of gold. We're in the process of completing an updated pre-feasibility study on Aurizona that would incorporate the addition of an underground mine with the open pit. This should come out later this year, and again, you'll see the expansion of production as a result of that underground mine and the extension of the mine life at Aurizona. It's been a great mine for the company. Again, another one where we've already recovered 100% or well over 100% of our initial capital costs at Aurizona. Fazenda, this is an underground mine in Bahia, Brazil. And what's interesting about Fazenda is it's very close to our Santalou mine, which we're building right now. And we've also staked a whole bunch of the ground between the two. So what we're looking to do at Fazenda and Santalou is kind of integrate those assets into more of a complex. Between the two of them, they can do up to 200,000 ounces of production per year. We're really focused on exploration between these two assets. And we should have some news coming out on that exploration program in the next month or so. But very prospective, high potential for more gold between these assets. And of course, we can triage where those future gold deposits could go between the Fazenda complex and Santalou. And then we have our RDM mine. This is an open pit mine, also in Brazil. One of our smaller assets will do about 65,000 ounces this year. First half of the year was really focused on a stripping program. We've now opened up that pit, should see lower strip and higher production, lower costs coming from RDM in the second half of this year. Santalou, also in Brazil, this is one that is in construction. I'm going to touch on that in a few slides. Next slide. Los Filos expansion, this is the CIL plant we talked about. The Greenstone Project, this is a new asset that we acquired with Premier in Ontario. Castle Mountain, this is the expansion of phase 1 to phase 2. The message on this slide is basically with these 4 expansion projects, we can add incremental production to our existing production of over 600,000 ounces over the next several years. So again, assets fully funded to reach that 1 million ounces. So focusing quickly on Santalou's, project is on time and on budget for first gold pour in hopefully early next year, Q1. Initial CapEx is around $100 million. We started mining in June, and hopefully in Q4 here, we'll be able to announce commissioning and substantial completion of construction. Very excited to get this mine into production. It's low cost at $877 all-in sustaining cost. Initial production of about 110,000 ounces per year. Greenstone Project, this is now going to become our largest asset in the portfolio. We bought 50% of this with the acquisition of Premier, another 10% shortly thereafter from Orion Mine Finance. We have a 60% interest with Orion as our partner on the other 40%. This project, we think, is one of the most attractive development projects in Canada. 5 million ounce reserve will produce over 400,000 ounces of gold per year for the initial 5 years once it's in production. We hope in the fourth quarter here we can get to a construction decision. It's fully permitted, community agreements are in place, fantastic infrastructure right off the Trans-Canada Highway. When this mine is built and operating in 2 years, it'll be one of the largest mines in Canada. So very, very excited to be able to announce formal construction at Greenstone, and this will be a real focus of the company over the next couple of years. Time's going fast. I'm going to speed up a bit here. ESG, we've been growing. Our ESG program's been growing. We issued our first ESG report this year with our 2020 targets and our performance against them. We also report all of our ESG and health and safety metrics on our website every quarter. And obviously, we're focused on trying to find ways to improve green energy, water conservation, dry stack tailings, reducing emissions. All of those things are things that we're focused on near term. Would like to get to a point where we can set a target date for zero greenhouse gas emissions. So why do I think Equinox is great value right now? Well, we've got a portfolio across the US, Canada, Mexico, and Brazil, fairly equally balanced. So great mining jurisdictions, all in the Americas. We've got, I think, the highest growth profile of any of our peers in the peer group. In a few years, we'll have one of the highest production of the peer group as well. And we also have one of the largest reserve bases of our peer group. Our reserves are all located at permitted or operating projects. So these are real reserves that will be mined. However, we're trading at near the bottom of our peer group on a price to net asset value. So I think as we advance through the construction of Greenstone, complete the construction of Santalou's, increase that production profile, we hope and expect that we should move up this value curve. We're fully funded for all of our growth plans. We've got over $300 million in cash, $200 million in credit available under our revolving credit facility. We're making great operating cash flow from our assets, over $200 million last year, $120 million at the first half of this year, more to come on the back half of this year. And we also have about $420 million, probably closer to $500 million today, in marketable securities through our interest in Solaris Resources and i-80 Gold Corp. Our board and management are very aligned with our shareholders, one of the highest insider ownerships of anybody in our peer group, next only to Endeavour Mining. Ross is our largest shareholder at over 8% of the company. All of the executive team, including Ross, have been buyers of the stock this year. And personally, for myself, for Christian, for our CFO, COO, these are very large personal positions in the company. So very aligned with our shareholders. So just to summarize sort of what we have coming over the next few months: completion of construction at Santalou's and the commencement of commissioning, announcement of construction decision at Greenstone in Ontario. We'll have the updated pre-feasibility study on the Aurizona mine, incorporating that underground, a study on a CIL plant at Los Filos, some more exploration results, particularly in Brazil, and maybe some additional reserve resource updates as well coming over the next 6 months. So a lot of news flow coming at Equinox over the next several quarters here. Just to conclude, we've got a fully funded growth profile to over 1 million ounces of production, run by a very strong management team and board, and trading at a very good value today for incoming shareholders. So I think I'll conclude there, Joe, and if anyone has any questions, we can take them now.
I don't think we got time. We got like 15 seconds. But, nice one, Greg. But yeah, thank you very much, Greg.